Hi there, welcome to Kneppy Invest. Let's have a look at some of the interesting, intriguing announcements that were released during this shortened trading week. We only had trading on 4 days of the week because of the Australia Day holiday. We won't get into politics in this particular video. Whether Australia Day should be celebrated on this day or not is not the point of me doing this video. That's for another video, and I will not be doing that video. That's irrelevant. The main thing is no trading on this day, which makes me sad. In my opinion, there should be trading on every single day of the year, including Christmas, Easter, and all those public holidays. But maybe I am just weird. I just like those days where there's trading. I like those days where companies are releasing interesting, intriguing announcements, like we have seen during this particular week, which was between January the 22nd and 25. So I'm going to show you some of those companies that did release interesting or intriguing announcements, focusing on the charts, looking at the announcement themselves. Now, I've already done standalone videos on 5 of these companies: Appen, Zip, Liontown Resources, Nanosonics, and Domino's Pizzas. So look out for those videos that have been released over the past 5 days. 4 of those companies released negative announcements: Appen, Liontown Resources, Nanosonics, and Domino's Pizza. In fact, Appen, Nanosonics, and Domino's Pizza share price all fell by the greater than 30%. Appen by 40%. Zip was only one that released a positive announcement. Their share price has increased. Now, the other 15 companies that I will be showing or showcasing in this video are generally released good announcements, positive announcements during the week. So we're talking about Austin Engineering, Polynovo, Judo Bank, Qantm Intellectual Property, a company called Cobre something, Cobre. They released an announcement in regards to some sort of relationship with BHP. Kogan definitely released a positive announcement based off the market reaction to that and the share price taking off. Resmed, Mineral Resources, Grange Resources. A few of the companies I will be showing you in this video did release negative announcements: Sayona Mining, Calidus Resources, and Baby Bunting. But we'll start off this video briefly going through those 5 companies that I did do a standalone video on: Appen, Zip, Liontown Resources, Nanosonics, and Domino's Pizza. I won't touch upon the announcements in regards to the reasons why the share prices of these companies rose a lot in case of Zip, or fell significantly in case of the other 4 companies. I'm just going to focus on the chart and focus on the 5-minute chart just to see what happened with the trading during the week, and also focusing on the volume. The main thing I want to see is when was the low in the share price after the company released, or the high after the company released this negative announcement. And typically, I want to see the low reached in the first 30 minutes. That's actually a good sign. If you see the share price keep on dropping and you see heightened volume, sort of like we did see with Domino's Pizza, that's actually not a good sign moving forward. So let's have a look at Appen here first. And this is 5-minute. Share price dropped in that first 5-minute by, would have been 35% or something, 33%. Did keep on dropping over the next 20 minutes, but the bottom in the share price for Appen was in that first 30 minutes when we did see the greatest volume coming in, and the bottom in Appen's share price was 27 cents. So we could sort of put a support line right on 27 cents. The share price actually did rally during the rest of the week, particularly on the 24th, which would have been the Wednesday, and the share price got as high as 35 cents. And right now, the share price of Appen is 32 cents. Now, with this bad news that Appen did release and all this negative sentiment in this company, it wouldn't surprise me to see the share price of this company get lower than 27 cents, just because of the uncertainty. So even though the share price low was on that first day, the Monday, the rise in the share price just could be what you might refer to as a dead cat bounce. Not a lot of volume when we did see share price rise, and you really want to see the volume. And really, there was no announcement that was released on that day to cause that bounce. I think it's just shareholders saying maybe there's some value in this company right now. I even saw an article on Motley Fool, I think it was, talking about would Warren Buffett buy Appen, which is a ridiculous question to start off with, because there's no way Warren Buffett would even think about buying Appen. And I think the end point in, or the end conclusion in that article was, yeah, Warren Buffett would not even think about buying Appen because it's not profitable, that sort of thing. Anyway, so we just don't know when the end of the bad news for Appen is going to come. This could be the last of the bad news. We just don't know. And even though the valuation of this company does seem quite low at $73 million, there's potentially it could fall significantly more from here. But Appen is going to be coming a little bit more intriguing if they can show, management can show they're turning things around. Now, on the other end of the spectrum, we had Zip. And if you do look at the daily chart for Zip, this is definitely a different story. This company's sentiment is definitely, or has definitely shifted from highly negative to positive. You can see that not only in the share price trend, but also the volume. We are starting to see really good volume, big volume coming in. And this is a really positive sign. You want to see volume increasing when the share price moves into an uptrend, and the share price has taken off. So if we look at the 5-minute chart, it's in an uptrend. So they released their positive news on the Monday, so another trading update. And the bottom, you put it like that, the bottom, in fact, technical works here. So the bottom in that first 30 minutes of trading, it was tested twice. It was tested later in the day on the Monday, was also tested on the Tuesday. That bottom was 68 cents and tested twice, and those tests sort of succeeded and the share price took off. As soon as it, particularly after the second test, it took off. And then we saw the share price go back a bit on the Thursday, went to 70 cents and did not quite get to 68 cents. That's bullish. So I'd like to see the top, the high, which was 80 cents, which was reached on the Wednesday. I'd like to see the share price get above 80 cents to confirm that we have seen a higher high, higher low. So the daily chart looks bullish. 5-minute chart is looking sort of bullish, but definitely the daily chart looks absolutely brilliant right now, particularly when you take into account the volume for Zip. Liontown Resources, yes, not a lot of love in lithium companies. And when there's not a lot of love in a certain sector of the mining community, that's when I become interested. Now, in saying that, still seeing a lot of lithium companies, mining or like junior lithium companies out there listing on the ASX, maybe not as many as we did see. We're even seeing some non-lithium mining junior companies saying they're getting into lithium, which is really interesting. I thought most of those companies would be sort of, what's the word? Their enthusiasm in this area would have been negated because of the massive drop in lithium prices. But it seems like there's still a bit of enthusiasm in lithium. And I just need to see the enthusiasm completely destroyed before I get ultra excited about lithium. But Liontown Resources, pretty big drop on the Monday. Share price dropped 21%. And the share price has hovered just above a really important support level at 88 cents. Current share price of Liontown Resources, 92 cents. And if we look at the 5-minute chart, you can see the share price has just remained above that support level. So that's actually a good sign moving forward, but I wouldn't be ultra bullish about this company right now. I wouldn't necessarily think we're going to see a bounce because I thought we would have seen a more or bigger bounce on Tuesday, Wednesday, Thursday, and we didn't see that bounce. So I think there is a possibility the Liontown Resources could fall a little bit further. But again, it's all going to come back to lithium prices. If lithium prices go on a tear for some reason, you're going to see Liontown Resources share price start to move up alongside some of the other lithium players. But I wouldn't necessarily say this is a bullish 5-minute chart or negative, bullish or bearish 5-minute chart. But if you do see a share price fall below 87 cents, that would be a little bit bearish. And I wouldn't be surprised to see the share price rally to $1.20. But I thought, again, I would have expected that maybe to happen a few days ago. Nanosonics, they released a negative trading update. Share price bottom for Nanosonics was in that first 5 minutes. And that was the peak in the volume as well. So negative, maximum negative sentiment was in that first 5 minutes. And the share price has rebounded a little bit. Now, we've only seen 2 days of trading. So a small sample size here. But the very fact that the maximum amount of selling happened in that first 5 minutes of trading is a good sign moving forward. And we didn't see a lot of selling during the rest of the following 2 days. The most of the selling we did see after that was towards the end of closing on the Wednesday, but then we saw the share price rally on open on Thursday, and then not a lot of selling coming in the rest of Thursday. So a nice reaction from the market. Not a big bounce, but we haven't seen a lot of selling. So possibly the bottom has been reached, and we do see a nice little support level at around about $2.90. So share price fell through that support level and then rallied. And in fact, you can see the share price just hover right on $2.90 through the rest of trading on Wednesday and has remained above $2.90 on the Thursday. So if you look at the weekly chart, you can see that support level really began because it was really set up around the lows we saw in June of 2022. Now, overall, when you do look at the weekly chart, it looking fairly bearish. So we wouldn't be surprised to see if the negative sentiment in this company drives the share price down below $2.90. But I need to see that before I become even more bearish on this company right now. If anything, I'd be more likely to add to my position in this company. Now onto Domino's Pizza, and this is probably a little bit more bearish when you look at the 5-minute chart. Now, we've only had 1 day of trading, a lot of selling in that first 30 minutes. And the problem we did see with Domino's Pizza is during the day of the trading day on Thursday, we did see some selling coming in, particularly at around about midday or about 1 o'clock. Australian Eastern Daylight Saving Time, we saw someone, more than likely institution, dump on market. You can see that over a 10-minute period, heightened volume. In fact, you can see the 1-minute chart. It looks way better than the 1-minute chart. You can see on the 1-minute chart, right on midday or 1 o'clock, massive selling coming in over about a 5 to 10-minute period. And that selling dried up. And there was a little bit of selling coming in at about 1:30 p.m. and selling right on or in the closing auction. So there is still some supply of shares on the market from institutions dumping. I think the best way for share price of Domino's to rise from here is if we see the end to this dumping. And I would say, and I was surprised by the 30% drop in share price, I really think the market is overreacting, because there were some positives to this announcement. It was just really only Asia was negative. Australia's positive, Germany was positive, even some markets in Asia were positive. So I think the market is just focusing on the negativity and totally forgetting about those positives. So in this case, I think the market is overreacting, and I wouldn't be surprised to see a really good bounce over the next few days. But of course, I could be wrong, and this could be just institutions just selling en masse. And if institutions continue to sell en masse, there is more downside to come for Domino's Pizza. So I have added to my position, bought in at $39.55. So I bought actually fairly early on. I bought around 10:30 a.m. or 9:30 a.m. local time. Anyway, so another good thing about this is I was all willing to sell out of some of my Domino's Pizza shares if the share price opened up only down about 10%, but it opened at $46. So I was thinking maybe selling between $48 and $50, and it kept on falling. So I thought instead of selling on it, add to my position because the market is overreacting right now. So it's very useful to be adaptable and flexible in your decision makings in situations like this, in highly volatile situations like this. Domino's Pizza. I would not look at the PE ratio. I'd say the PE ratio is fairly high. It says the PE ratio is 121. I would not look at that at all. I think you can make mistakes if you just focus on PE ratios. Anyway, the other thing I'd say is one of the reasons why I was a long-term investor in this company is because they did have long-term goals, and I do suspect that their long-term goals are going to change. I think they were being a little bit too, what's another good word? I think they were being a little bit too optimistic. Not that optimistic's not the word. I think they were expanding a little bit too quickly. I would have liked them to probably now expand a little bit more efficiently is probably the best word to say it. And I think their expansion plans were a little bit too, they were a little bit too optimistic about how they were going to expand. And I think what's happened the past few years may have altered their plans. And maybe then they're, what's a word? Maybe I'm having a hard time finding words today. This happens to me occasionally. Maybe their plans need to be adjusted. It's very important, just like an investor has, just like I did with Domino's Pizza. It's very important to be able to adjust your plans. Even if you have rules, sometimes it is important to look at your rules and say, I'm going to break my rules on this one occasion. So even though they had long-term goals, they need to adjust those long-term goals because things have changed for Domino's Pizza. Now let's get into companies that I did not release a standalone video. I was very close to releasing a standalone video on Polynovo and Resmed, but I decided not to because of what happened with Domino's Pizza and Nanosonics. So first company is Baby Bunting. So this was negative. They released a trading update on the Monday. In fact, it wasn't a trading update. It was preliminary results. Now, when a company releases a trading update or results, one of the things I'm going to look at is commentary from management. Now, also look at the numbers, but I also want to focus on commentary from management. So the first thing I will look at, or first thing I did look at with Baby Bunting was changes. Changes in sales, gross profit, pro forma, NPAT, and everything's negative. So straight away, this was negative. Now, it's very important to note that maybe the market expectations that it was going to be negative, and maybe these results weren't as negative as the market expected. And that could have an effect on the share price. Sometimes you will see the share price rally, even though you look at the numbers and they look pretty bad. And the reason the share price would rally is because the numbers weren't as bad as the market expected. So I did not know what the market expected, but my first inclination, these numbers look bad, look negative, and the share price might drop. And then just looking at the commentary, particularly if the numbers were not as good as the company's expectations or guidance, that's the other thing to take into account. So looking at commentary from the CEO, Mark Pepperson, first half update shows that while conditions have remained challenging, we are beginning to see improvements in operations and performance from changes we've introduced into the business, reflecting our focus on trade, productivity, and customer experience. This is really interesting, this bit. Trend in sales growth are turning, with comparable store sales moving from negative 8.8% in first quarter to only negative 5.3% in second quarter. Over the last 9 weeks, which corresponds with the launch date of changes made to our go-to-market messaging, includes the Black Friday promotional events and the Boxing Day sale event, comparable store sales have been around positive 1% year on year. Gross margins have remained flat. It's actually a good sign moving forward, or at least a slightly positive sign moving forward. So, and profit down to 3.5 in the first half, which does seem fairly low. So again, if you look at the P ratio for this company, it's going to be quite high if you just focus on this first half result. So it looks negative. There was a little bit of positivity in the CEO's commentary. Now, an argument would say, well, the CEO has to be positive, but that's not always the case. A lot of times you will see the CEO or the company be absolutely honest in their assessment of where the company is and also their forecast of the future. And sometimes they will show that in their commentary. So I can see some positives, see some negatives in this particular Baby Bunting update, but I expect the share price to drop, and the share price did drop. So let's have a look at the daily chart for Baby Bunting. Now, when you look at the overall chart for Baby Bunting, it's still in a downtrend. No reason to get excited yet about Baby Bunting, and the share price did drop 6.6% on this day, and the share price has fallen even further. But the share price right now at just above $1.60 is at a support level. The reason I'm saying it's a support level is the last two lows we have seen have been around this level. So if I just put in a line right there, I can get rid of this now. So the share price of Baby Bunting is at those two previous lows, or around those lows. So now could be a support level for this company. Not quite as low as we did see in June of 2023 when the share price got down $1.12. That seemed excessive low, and then we saw a really good bounce. Share price is still in a downtrend. That has not changed. Sentiment in this company is still negative. That has not changed, but maybe the share price might see some support around these levels. We did see a little bit of a heightened volume as well, and that's not a good sign. So if we do see a break below $1.60, that would be negative, but maybe because of human psychology, investors know the low in this company's share price in October and in December was around about $1.60 to $1.65. That's why we might see support, and that's why we are seeing support right now. And why I say we are seeing support, you just see that on the 5-minute chart. So you can see, we did see on the day they released these preliminary results, the share price actually reached a low on that day of $1.64, and then we saw a bounce. We have seen share price get as low as $1.62 on the Wednesday, and then we saw a bounce. But we can see the bounces have been weaker and weaker as we go. That's actually not a good sign moving forward. This is sort of like one of those triangles. What I mean by triangle is you can put a line like that. You can see how it looks like a triangle, and the bounces have been weaker and weaker, and that's actually a fairly bearish sign. It doesn't mean it's going to go lower than sort of this horizontal support line, but there is a chance it might go lower. We need to see the share price get above this horizontal line. If the share price can get above that, that actually could be a sort of a bullish sign. I'm going to leave that line there. Now, the next next companies, maybe 6 or 7, 8, maybe 10 companies I'm going to show you, all released positive announcements. So even though a lot of the companies or standalone videos I did were negative results or negative announcements, Austin Engineering released a positive announcement. Austin upgrades guidance. This is a profit. This is a pure, and this is the definition of a profit upgrade. In fact, upgrades guidance is exactly what you want to read. So as soon as I saw this announcement or the title of this announcement, I went, this is a good announcement. Austin upgrades guidance. It's in the title of the announcement. This is a positive announcement. So Austin upgrades guidance by 18%. So not only is it revenue, it's also profit. So upgrading profit and revenue. So original guidance for revenue was between 120 and 140 million. Now 138 to 144 million. Original profit guidance was between 10 and 12 million. Now it's between 12 and 14 million. You might say, well, it's not a big profit upgrade. It's still a profit upgrade. 18% profit upgrade. And in this sort of, or this type of announcement, the share price should rally. Did it rally? Of course it did. Share price rallied. Well, we're going to have a look at the daily chart. Share price rallied 14.3%. Yes. The funny thing is, share price was rallying before this particular announcement. Share price was at 24 cents in November. So the share price has rallied by about 80% since those lows. And it's interesting because back in May of last year, the company actually released a negative announcement. That's why the share price on the 4th of May, 2023, dropped 20%. It was a negative announcement. So you can see how sentiment of companies can shift quite quickly just because of announcements from a negative to positive announcement. And you can see this company released this announcement on the 22nd, and the share price is going sideways, just below the highs we saw back in April before that negative announcement. So this level around or between about 38 and 40 cents or 41 cents is a resistance zone because of all those shareholders back in March, April last year who bought in. You're now seeing the opportunity to sell out, not at a loss. And remember, those shareholders who bought it at, say, 40 cents back in April of last year saw the share price fall from 40 cents down to 24 cents. They hated this company. They thought this company was a dog stock. And when they saw the share price rally towards the end of 2023 into 2024, and then they saw the share price rally 14% on the back of this profit upgrade, they saw the opportunity to sell out, even though this was a positive announcement. And that's why the share price is sort of meandering around about 39 cents because of those shareholders back then who are now selling. Nice volume coming in. Okay, volume we'll say. Not as high volume as we saw on the day there was that negative announcement in May of last year. But if the share price can get above, say, 41 cents, that would be positive for Austin Engineering, because if we look at the weekly chart, the share price has not been above 41 or 40 cents since 2015. Yes, 2015. So definitely putting this company onto my watch list because the share price was in a beautiful uptrend before that negative announcement in May, but it looks like that was just a one-off. So definitely I'm putting Austin Engineering onto my watch list. In fact, I'm going to do it right now. It's not on my watch list there. Beautiful chart for Austin Engineering. Polynovo. Now, this company has a market cap above $1 billion. So the market has a high opinion about the potential. It's a high opinion. Market has a lofty opinion about the potential of this company. So according to CommSec, this company has a market cap of 1.24 billion. No PE ratio because this company is not profitable. Well, I'll talk about that in a second. No dividend yield because company. Morningstar says it's overvalued. Consensus moderate buy. Anyway, what did this company do during the day? They released their first half trading results unaudited, and it was positive. Nice growth. So with a company, when a company has a market cap of 1.25 billion, they're not profitable. You want to see some really good growth. Revenue up 66%. It's really interesting. They have revenue up 66%. Profit. Maybe I should have said profitable. Anyway, so total global revenue up 65.6% to 48.8 million. So this company almost, or probably will have $100 million of revenue for the full year. Record first half sales. Yeah, probably shouldn't even say that. US half year sales up 32.2 million. Of 32.2 million, up 41.7%. Rest of world sales up 122.2%. BARDA revenue up 133.1%. And probably the most exciting part of this announcement is EBITDA, EBIT, and NPAT all positive. EBITDA 1.9 million, up 4.4 million. Same time last year. I think that's what STLY means. EBITDA was negative 2.5 million. Underlying EBITDA 3.6 million, which excludes non-cash items. So how do you think the market's going to react to this particular announcement? Well, it's also based off expectations, but based off how the market reacted, the market or these results beat market expectations because the share price, have to go to the daily chart again, share price rallied 9%, actually 9.8% for Polynovo. And more importantly, the next day, share price rallied even further. We have seen a little bit of selling coming in, but not a lot. And this chart is starting to look really good. Bouncing off its lows, moving into an uptrend. Bouncing off lows probably is a stupid statement there. Share price, last time share price was this high at around $1.80 was way back in April 2023. So not quite a 1 year high. So it does look like the sentiment in this company is shifting, and this is based off financial news or good financial news. Company becoming profitable, and that is an inflection point. So I can definitely understand why the market is becoming excited about Polynovo, and also the growth in revenue is quite good. Not as good as some other companies, but good. Anyway, you'd want to see really good growth in revenue with this company because profit or revenue is only markup, is only $1.25 billion. So one of the things I do look at in regards to companies like this is revenue growth. You want to see really good revenue growth. So if you look at TradingView, revenue has grown from $13 million in 2019 to $65 million in 2023, and more than likely it's going to be well over $100 million in financial year 24, and the company will be profitable. So exciting times for Polynovo and Polynovo shareholders. So would I define this as a breakout? Yes. Share price is at least a 6-month high, and the share price has moved up on positive financial news. Congratulations to Polynovo. Judo Bank. So if I had a choice, actually it's Judo Capital Holdings. I thought it was just called Judo Bank. If I had a choice between the big 4 banks, Commonwealth Bank, Westpac, the other 2, and Judo Bank or Judo Capital Holdings, I would go towards Judo Capital Holdings every day of the week. Those other 4 banks are mature. Not much growth, if any growth at all. In fact, some of those banks probably will decrease in size, decrease in revenue over the next 5 to 10 years. A smaller bank like Judo Capital Holdings has way more potential for growth, and that's what I'm looking for, growth over a 5, 10, 20-year period. Now, a little bit more risk in these sort of companies, but definitely the chance of growth is significantly greater than those banks. And I really hate it when some people, particularly experts, say, I like this company because it's bigger. Bigger does not mean better. Bigger. Most of the times, actually, bigger does not mean better. Anyway, so company released first half 24 trading update. So again, you see a similar theme of those sort of announcements that I am attracted to. Trading updates or even first half financial year audited results. I love a profit guidance. Love a profit upgrade. Love those sort of announcements. And the reason behind that is these sort of announcements tell us how a company is performing, and that is the most important thing. these sort of announcements can shift sentiment in a company on a dime. That's why these sort of announcements are really important. And don't listen to people like, I think it was Andrew Page on Motley Fool who said, well, after share price rises 10%, you've missed the boat. There's no point to buying in. Don't forget, 3 years ago, was it 2.5 years ago? 2 years ago, I bought a company after share price rose 91% in one day. The share price went or has become a 10-bagger after that. And Andrew Page would say, well, you're too late now. That company's Neuropharmaceuticals. I just heard that on one of his recent Motley Fool podcast. And I just couldn't believe when I said that. It's just, that's ridiculous. It's you're just not aware of what's actually happening out there. These are sort of announcements where you want to take attention to. Even if the share price increases 10%, this could be the catalyst for a significant re-rating of that company's valuation because of these sort of announcements. These are the most powerful announcements. Just don't think share price has rallied 10%. Well, I'm too late. No. What Andrew Page says you should be doing, buy the company 5 years beforehand. See the share price goes sideways. For instance, Neuropharmaceutical share price went sideways for 10 years. Just hold that company for 10 years and then you can take advantage of that share price rise. No, you wait for the share price rise. You wait for it to become de-risked. That's the sort of thing. So these companies are releasing these positive announcements are more de-risked than they were before. Now, you might not get maximum share return, but you're de-risking. Your risk level is lower. Not all the times it happens. Sometimes you'll see a share price rally and then fall back. But usually when I see that, it's the bigger companies, the companies with more analysis following it, those sort of companies. Smaller companies, when you see a really good announcement, share price has potential to rally significantly after that. Because with Neuropharmaceuticals, 1 year after that announcement, where the share price rallied 9% in one day, I heard no one talking about it. Now I'm hearing people talk about Neuropharmaceuticals everywhere on all platforms. So it takes a while for word to get around, particularly for those small companies. For bigger companies, the word is out there almost immediately. Anyway, so Judo Bank. So they're called Judo Bank in this announcement, but seems like the company's called Judo Capital. Sorry for that rant. I just remembered that ridiculous statement that Andrew Page said that you're too late. You're too late. If the share price rallies 10%, you're too late. There's no point. No point anymore. Anyway, okay. So when I did actually have a look at this, I thought it looked really good. So nice growth in profit from 54 million to 67 million. Income increase, total expenses not as great an increase as income. Net profit before impairment, that's really good. Cost of risk, everything was looking really good. And I thought, let's just wait to see how the market reacts. Just because I thought it was really good doesn't mean the market thinks likewise. So up 16.6%. Yeah, so this was a good announcement. And this is the sort of announcement that can shift sentiment in a company. So sentiment in this company has been negative, which is interesting because this is the sort of company I'd be more attracted to than the banks, the big banks. But this company has been punished because of the perception there's more risk in this company. So market cap 1.23 billion, but I think this is a much better value than those other companies. PE ratio 17.3. I think that's going to be lower if the share price doesn't rally from here. I would not say the downtrend in the share price has come to an end just yet. So I do like to see the share price at least a 6-month high. And the last time the share price was this high was in August of last year. So we are talking about a 5-month high. So I need to see the share price at least go sideways from here. I'd like to see that's the least I want to see. If we see some selling coming in, and we could see some selling because the share price has been higher, so we are going to see some natural resistance coming in because those shareholders who bought at high prices are natural resistance. They will still want to sell. But the good thing is we haven't seen much selling coming in. In fact, we've seen demand overwhelm supply, and that's why the share price has rallied in 3 consecutive days from about 90 cents up to $1.10. Yeah, so Judo Capital, the chart is looking a little bit more attractive, but I'm just not there yet, just with this chart. For me, for this to be a breakout, for my definitions, it needs to be at least a 6-month high. So we have less resistance, less of those shareholders who bought in the past put their shares on the market. So less supply of shares coming onto the market. Next company is Qantm Intellectual Property. Qantm, there's no U there. Qantm. They released an upgrade to financial year 24 earnings compared to analysis estimate, which is really interesting. So again, the most important word here is upgrade. If I see a word upgrade in the announcement, it's going to be good. Automatically, it's going to be good. So I knew this is going to be good straight away. Do I really need to look at this? Probably. So let's have a look at it. Upgrade to financial year 24 earnings compared to analysis estimate. So what management are doing here, they're saying, well, the analysts have their forecasts for financial year 24, and they're wrong. They are being too pessimistic, too conservative with their numbers, and here is our guidance. And this is, there definitely should have been an upgrade, a re-rating of this company's share price, because a lot of the analysis is saying this company is valued like this based off our estimates. And now the company has just said, well, your estimates are wrong. You have to upgrade your forecast price for the company. So for instance, for the full year, 2024, Qantm expects earnings per share reported to be between 20 and 25% higher than the analyst estimate of 8.1 cents. So we're talking about earnings per share of about 10 cents. The share price of this company is $1.07. So right now, the P ratio of this company is around 10. Seems quite low. For the full financial year 2024, Qantm expects underlying EBITDA to be between 8 and 10% higher than the analyst estimate of $31 million. So the market cap of this company isn't high. It's like $100 million or something, $150 million. So EBITDA, what was it, 33? What was it, 31 million? So this company is currently trading on 5 times EBITDA. That doesn't seem too high at all. So I wouldn't say this company is overvalued right now based off these numbers that the company has just released. So let's have a look at how the market reacted. So straight away, this is an upgrade. So the share price should have rallied significantly, and it did. Of course, it did. Maybe not as much as I thought, 14.7%. And this is the definition of an upgrade of a breakout, in my opinion. Company released a positive financial update. Share price rallied 14.7%. We didn't see really big volume coming in. So the one thing I would have liked to see is bigger volume. Share price had been in a downtrend for a while, negative sentiment. The downtrend had been coming to an end. Share price can see consolidating between August and before the company released this announcement. You can see share price going sideways, but definitely share price was not in a downtrend. So when you see a share price consolidating, what you want to see is a good financial announcement from the company, which would confirm that all those bears were wrong and all those bulls now were right. And that's right. So the last time the share price was this high at $1.08 was way back in June of 2022. So we're at about an 18-month high in the share price. If we just have a look at the weekly chart, you just see a long-term downtrend. Yeah, so in fact, you could say the share price of this company has been a downtrend since it listed on the ASX back in 2016. Share price $2.50, now $1.08. I would not say this is a shift in the long-term trend. We can see there was a possible shift in long-term trend back in late 2021. That failed. So this could be the start of an interesting period for Qantm. So I definitely will put Qantm onto my watch list. Let's do it now. Will I buy Qantm? QIP. I definitely will be thinking about it. The very fact that we haven't seen much selling coming in, and the other thing I should say is a really good point to buy this company would be right there. The last high we saw back in September was around about $99 or $1. We saw the share price on this particular day get to a low of $1. So it bounced off that old high. So we've already seen the bounce off $1. And if I was following Qantm of this day or following days and I saw the share price get to $1, that would have been a natural buying price for me. $1.07, 7% higher than that buying price. May not deter me as much. So anyway, so if I do see the share price $4.07, and I would say probably there's not a lot of volume in this company either. Let's have a look. Volume, 99,000 shares traded. Some days we only see 252 shares traded, so not a lot of volume. That does not deter me, but the reason that's important is you might see a fair bit of volatility in a day. So you can see there is a couple of sellers, a few sellers above $1, only 3 buyers above $1, and the highest seller is at $1.09. So all you need is one seller to come in who just dumps on market, and you can see the share price fall to $1, and then we see a rally. So maybe I should put a sneaky buy in about $1.04, maybe. For Qantm. The next company is a company I've never heard of, Cobre. I can see share price down 11%, but that's irrelevant because on the 23rd, the share price of this company rallied almost 80% on huge volume. 68 million shares traded, which probably suggests there were some day traders in there, compared to the previous day, with only 429,000 shares traded. So massive volume coming in. What caused this interest in this company? You can see the volume dying away, which is natural. What caused the interest in Cobre? Well, it was this announcement. BHP signs 2024 export agreement with Cobre. I typically won't get excited about these sort of announcements. So again, sort of announcements I get excited about: trading updates, profit upgrade or profit downgrade, any sort of results, and that's it, really. Those are, well, that's not true. Phase 3 positive results gets me excited. Those, yeah, and there's probably others out there. Those are things that get, really good mining results get me excited, but I'm probably less experienced when it comes to mining results, on how to read mining results. I'd like to improve that in the future. Anyway, so Cobre has been selected. Let's just zoom in. Cobre has been selected to participate in the 2024 BHP Explore cohort. BHP will provide Cobre with $500,000 US dollars in non-dilutive funding to support and accelerate its exploration plans during Explore program period. Explore program provides participants not only with funding, but also with full access to BHP's deep expertise and global partnership. So now the only thing this could be is positive. There's no negatives about this. You can sort of understand why the market got excited about this. You see the biggest mining company in the world interested in this small company. And when I say small, I'm pretty sure the market cap of Cobre would be fairly small. $19 million, according to ComSec. According to TradingView, it has a market cap of 21.5 million. Market cap of this company has been, actually, what does Cobre do? We don't need that announcement. So typically in an announcement, a company should have what they do later in the announcement. They did not do that in this announcement. Shame on you, Cobre. So let's go to another. I have no idea what this company does. Maybe they mentioned it in here. Let's have a look at. We'll have a look at this one and this one. Actually, maybe we'll reopen up this one BHP announcement just to see if they do mention what they do. I can't see it. Oh, copper. Copper. Looks like maybe it's copper. They just mentioned copper belt. Kalahari copper belt. Have the potential to host tier 1 copper silver deposit. So copper, silver, that's all we need to know. So it's not lithium, at least. Anyway, and then the chart. So yeah, the share price, there was a bit of excitement in this company back in August 2022, and that excitement died away fairly quickly. So this is why I'm not interested in junior mining companies, because the excitement of a company can die away really quickly, and now the share price is lower. And if we just not zoom out, zoom in, share price rallied 78% on the day, a huge volume, and I wouldn't say the downtrend is at an end just yet, because the share price has been downtrend for a while, and the share price was at these levels in July. So we're not quite, very close to a 6-month high. Ideally, what you want to see is a company releasing a really good announcement, which would sort of add on to this possible shift in sentiment. I wouldn't say there is a shift in sentiment or a trend in the share price just yet with this company, and they need to release at least one, or better yet, 2 really good announcements to confirm or to consolidate on this possible shift in sentiment and the trend in the share price. Now, Pilbara Minerals is a lithium mining company, and I'm paying more attention to lithium companies now, because possibly we're getting towards the bottom of the lithium cycle, the price of lithium possibly getting towards the bottom, and that's when I become excited in these sort of companies, not when the price of the commodity is at an all-time high. So they released their quarterly activities report. I'll look at the presentation. So I did hear someone say Pilbara Minerals is not profitable at current lithium prices. Now, I never always believe in what I hear. So I just mentioned that because someone did mention that. So this is what we could find or confirm that there was a cash flow. What do you call it? Oh, cash flow bridge. Okay. So this is the cash flow bridge. So they started off the quarter with $3 billion of cash and finished it with $2.1 billion. So that is a concern, but there was a reason behind it. And this is the reasons why the cash on hand fell during the quarter. This is the whole point of a cash flow bridge. So receipts of customers up 365 million, payments for operating costs down 191 million. So they were operating cash flow positive, it seems like, which is a positive thing. They spent 758 million on income taxes paid. There we go. So one of the main reasons cash on hand fell was because of income taxes paid. They also mentioned here that the 758 million of income tax payments, which include the previously announced financial year 23 income tax catch-up payment of $693 million. They also spent $222 million of capital expenditure. So they might have been operating cash flow positive, but free cash flow negative. And other investing activities, 98 million. Net proceeds from borrowings, 57 million. So in loans increased a little bit. And then had interest, leases, blah, 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 and foreign exchange losses. So the main reason why cash on hand fell was because of income tax paid. The other thing to take into account here, with where lithium prices are right now, this company is no longer printing cash in the operation. So maybe going sideways. So if lithium prices fall any further from here, don't expect this company to actually did mention it somewhere. I was going to say, don't expect this company to give their shareholders big dividends. So I'm pretty sure, go through this yourself. You'd see how the iron ore or the lithium mine has significantly decreased. Not the lithium, but the prices they're receiving from lithium has significantly decreased. Where was it? I did see something about dividends somewhere here. Oh, here it is. Yeah. Preserving balance sheet strength. So straight away, how do you preserve balance sheet strength? Well, one of the ways you can do that is not to pay a dividend. And they actually mentioned that here. Pilbara Minerals unlikely to pay a dividend to further preserve balance sheet strength, to be determined and announced in the full year 24, financial year 24 half-year results. So if you are reliant and expect Pilbara Minerals to have a really good dividend for you, don't be shocked when they stop their dividend payouts. So how would you expect the market to react to this? Well, I haven't showed you the whole announcement. There's nothing out of. I can see here, this is their quarter. Realized price went from $2,240 per ton to $1,113. So lithium prices are more than half. So that's why the realized price is down. Revenue down a fair bit. Costs, but unit operating costs, not that much, not that high. So they were making profits. I suppose they were so profitable at the current lithium prices. I am going to be interested in their half-year results just to see the cash flow statement, just to see if that is true. But just based off this particular slide and comparing the realized price, which was $1,113 per ton, US dollars, compared to the unit operating costs, which was $523, they are still generating cash in their mining operation. So, yeah. So I'm going to wait to I look at the half-year results to confirm that. So whoever said Pilbara Minerals are losing money where lithium prices are right now might have been a little bit wrong. Anyway, the market actually didn't mind this. Share price went up 5.8% on the day. However, in saying that, the share price fell a fair bit the previous 2 days. So this could be just a bit of a bounce, but the volume was a little bit higher in those previous 2 days. But at this point in time, Pilbara Minerals, those other lithium companies are becoming a little bit more attractive simply because the share price keeps on dropping. Market cap of this company is still 10.4 billion. That seems, say, dividend yield 7.23%. Yeah, they're going to have a dividend anymore, are they? Now to Kogan. By the way, if you have any more insight into Pilbara Minerals, I'd love to hear your thoughts with that company. Kogan, well, 8.4% on Thursday. They released a business update on the Wednesday, and we had 2 really good days. So was it 10% up on the Wednesday, 8% up on the Thursday? And I suppose, yeah, nothing to not like about this business update. I'm not going to talk much about this. They are pleased to announce sustained strong profitability through the first half of financial year 24. This was accompanied with a strong cash balance of 83.3 million after invested 17.2 million for the company's share buyback. So here are the numbers. Now, Kogan Marketplace down 13 million. Exclusive brands down 29 million. Mighty Ape flat. Third-party brands down 13 million. So if you just focused on the movement in gross sales, you might be a little bit more pessimistic. But adjusted EBITDA up for Kogan. Mighty Ape was a little bit down, but adjusted EBITDA 25.1 million, adjusted EBIT 14 million, which was a significant increase on the previous year. 590% up for EBITDA, 209.9% up for adjusted EBITDA, and gross profit 89.5 million, up 42.1%. So it seems like the market was focused on those 3 metrics, completely ignoring revenue, which was fell. But I think there was a reason. I'm pretty sure they did give a reason why revenue did drop somewhere in here. So have a look at for that. But the most important thing is how the market reacted, and the market loved it. So 14.9% on the Wednesday, then another 8.4% on the Thursday, and really good accompanying volume. That's the main thing. Share price struggling, not really doing anything over the past few months. Not necessarily call this a breakout either, because the share price was higher back in December. Share price rallied up to $5.50. So we haven't quite overtaken that with Kogan. If I see the share price continue to go up, that would be a good sign moving forward. And if the share price moves above $5.80, that would be maybe a breakout. Problem is, we did see the share price significantly higher back in August of last year. If we did see this massive rally in the share price back then, if the share price was just an orderly, moving up orderly, say, you can see my mouse here, if the share price went like this instead of like that, this could be a potential breakout. But a lot of shareholders who did buy at higher prices back in August of last year, that is resistance. And those shareholders think this company is a dog stock, want to sell out, and maybe they are selling out right now. But a much more positive 2-day trading from Kogan, but not quite a breakout for this company just yet. Oh, not yet. So Adriatic Metals is a company I'm following not closely. They are soon to be a silver mining company in Croatia, is it, or Serbia, one of those companies. And they released an announcement called the VARES Project Production Guidance and Update. Have no idea how to read this, how the market would react. So they are provided some numbers in terms of ore mined. So increasing ore mined over the next few years. So they got ore mined projections up until 2026. In fact, they have an average between 2027 and 2040 of between 800 and 900 kilotons per year. They also have here a nice little table of what elements are being mined. So we have zinc, silver, lead, copper, and gold, and how much of each they expect to mine over the next 3 years. So someone smarter than me probably could go in, look at the cost. I'm not sure if they provide any cost or they have provided cost. Take the cost or the projected cost, projected prices of all these commodities, and come out with the sort of cash flow this company could expect over the next 3 years. So you could sort of do a DCF maybe over the next 3 years with the company. But I didn't do that. Too much time for me to do. I just wanted to see how the market reacted, hoping maybe someone in the market did exactly that. And the share price did fall almost 10%. So the market didn't quite like what they saw with Adriatic Metals. And the other thing I should mention is Adriatic Metals share price has been really volatile over the past few months. Share price went from a $2.80 to $4.10 in about a month. So 50% rise in share price in about a month now has fallen from $4.20 down to $3.20. So a lot of volatility, not big volume coming in. If I see the share price get to $2.80, I would become interested. And it should be obvious just based off this chart why I might be interested in $2.80. 1, 2, 3, almost 4 times we have seen the share price get to those levels and then have a bounce. Then I'd get nervous if the share price gets to $4 again. So yeah, this could be just a trading stock right now because of this volatility. Wouldn't be surprised if there are people trading this just because of the volatility. Anyway, so if you are a shareholder of this company, if you maybe have worked out some numbers, did some numbers in a spreadsheet, put that into, or maybe send me an email. Some people have been sending me emails in regards to the work they've done, and I love that. Love it. Resmed, was going to do a standalone video on Resmed because share price rallied 6.4% on their results for the second quarter. Okay, so I did open up this, had a look at this because I'm a shareholder of this company now because of the drop in the share price. This was a no-brainer. A market completely overreacting. I thought this was a good time to buy Resmed at a really good value. I was a little bit too early with my first purchase, and then my timing of my second purchase was a little bit lower, but not your bottom. You never expect to always pick the bottom or the top. That's an impossibility. I think there are some people out there who don't understand that. When they say you can't time the market, you can't perfectly time the market. It's an impossibility, but you can roughly time the market, roughly. Anyway, so Resmed announces results for the second quarter. Main thing I was focused on was on gross margins. I think it was last quarter, might have been, or the last few quarters, the market has punished Resmed because of the lowering gross margins. This company has always had really good growth in revenue, and revenue continues to climb. So revenue increased by 12% to 1.2 billion, up 11% on a constant currency basis. Okay, sort of expected that. Gross margin contracted. I went, oh no, gross margins contracted 50 basis points to 55.6. But then non-GAAP gross margins grew 10 basis points to 56.9. Wasn't sure how to read that. Should I focus more on the non-GAAP or the very fact that gross margins contracted? So I thought I'd just wait to see the market. Income from operations decreased 2%. Operating cash flow of $272.8 million. Diluted earnings per share of $1.42. Non-GAAP diluted earnings per share of $1.88. The reason they mention non-GAAP and GAAP is because this company financials is sort of, it's aimed towards the American market. So they use GAAP, non-GAAP. If you look at their financial results, it's more in line with what you would see for American listed companies. For instance, if you go to the cash flow statement, they start off with the net income, then work their way backward. Sort of like we have with our reconciliation. You find this in the notes, reconciliation of cash flow to profit. That is very similar to the American standard or standardized cash flow statement. So you work your way back from the net income to get to the net cash provided from operating activities. And I actually have not had a look at this yet. So cash income down, cash flow from operations increased from 128 million to 272.8. That's a massive increase in cash flow from operations. Huge increase. Why was it a big increase? Inventories. Okay, you can see the effect of changes in working capital, and inventory changes can have a massive effect on operating cash flow. This company went from having negative, it's sort of not negative, inventories increased 86 million and then decreased 50 million in this particular quarter. And that's why there was a massive change in operating cash flow from last year to this year, just changes in inventories. Anyway, so I had a look at this and I was like, no, I'm not sure how the market is going to react. In fact, I wouldn't have been surprised if the share price fell, but the share price rallied up 6.4%. So the market liked it. 6.4%. They released this on the last trading day of the year. And definitely, I think the bottom has been reached. So the bottom in this company was, if I was paying a little bit more attention, in hindsight, this is quite obvious. So there's a bottom. The bottom in this company's share price was on the 22nd of March. And what you want to wait for, and if I just zoom in a little bit, you can see the share price test that level 2 times after that. In October and then in late October, it tested around about $21.30. And we did not see the share price going lower. This is actually a good sign that the low has been reached. And then the next low after that was a little bit higher. The next low was a little bit higher, next low a little bit higher, and then we're starting to see higher highs. So the share price of Resmed is now in a short-term uptrend. And I think this sort of movement on their quarter results is a good sign moving forward for Resmed. So this sort of was a period to take advantage or buy shares in Resmed around September or October. I was a little bit early with that just because I saw some value in this company. I wasn't sure when the low was going to be reached. Resmed. Go Resmed. Mineral Resources has been really intriguing in the last few weeks. So let's have a look at the trade history. So on the Monday, the 22nd of January, share price dropped almost 10%. I was like, why? Share price dropped 10%? Because there was a negative or a downgrade from an analyst. And for some reason, people who follow investing houses or whatever you want to call them, and they see a downgrade, they sell. They don't even care. They just sell. Ridiculous. And they are looking like fools right now. There were some investors who sold out at $52.50. Share price now is $59.39. They are kicking themselves by following that advice, that downgrade from whoever it was who released it, because after that day, the share price has rallied significantly. Significantly. Anyway, Mineral Resources released their quarterly activities report. I had a look at it, went, yeah, okay. So this company mines iron ore, lithium. They're also a mining services company. What's happening with lithium? Prices have been falling. So we'd think that maybe that's negative for Mineral Resources. Iron ore prices have been relatively high over the past half year, or the last quarter. So that should be positive for mining, for Mineral Resources. They do mention here in the lithium section, Wodgina, Mount Marion, and Bald Hill are profitable at current prices. That's good. That's good. Costs at Wodgina and Mount Marion are forecast to decrease this year as stripping completes. That's good. That's positive. So I did see quite a few positives in this particular report from Mineral Resources, and the market saw that as well. Share price rallied 7.1%. Now, this could be just a bounce off the lows we just have seen and a bounce off that particular negative 10% down day. And definitely, this is not a bullish looking chart. This is, in fact, still a bearish looking chart. And this could be just a little bit of a bounce. So I would not go buying this because of the share price rally the last few days. This is just a possible bounce, but this was a good quarter report from Mineral Resources. And if I was buying any lithium company, this would almost be at the top of the list because they are a diversified company. They have skin in the game, not skin in the game, but they have the iron ore play, lithium play, mining services play. I like the management. They're getting into gas, I believe, if I remember correctly. So definitely, if you haven't done any research on Mineral Resources, maybe do a little bit of research on this company, particularly if we start to see lithium prices rising. And if iron ore prices can remain where they are, this company could be significantly profitable or more profitable from where they are right now. Okay, Grange Resources. I was confused by this one because we saw really good rallies in Fortescue, Rio Tinto, BHP, nice rallies in Phoenix, Mount Gibson, but Grange Resources was doing nothing. And I thought, yeah, okay, so last quarter they were not profitable. And I'll show you that in a second. But if iron ore prices have risen, and I understand this company is a little bit different in their grade of iron ore, but if iron ore prices have increased over the past quarter, then surely this company has benefited and surely this company is now profitable. And then they released their quarterly report on the Thursday. And straight away I went, oh, yeah, okay, this should be good. I think the market's going to like this one. Okay, so the most important point here, okay, you could say, yeah, pellet sales have slightly increased, but the most important point is these two here. Actually, we've got 4 points that are pretty good. Yeah. So, increase in average received prices for the quarter to 159.65 per tonne, compared with 137.82 per tonne for the September quarter. So up $22. But compare the average received prices to the cost, which is in the next point. So in the previous quarter, they were receiving $137.82, but their operating cost was $139.44. So they will not generate any cash in the last quarter because costs were greater than their price received. But then have a look at this particular quarter, receiving $159.65, and the cost actually went down to $152 or $132.59. So this company was profitable, generating cash in their operations because of the increase in received prices and the decrease in average costs. Cash in liquid investments are $282.61 million compared to the previous quarter, which was $261.4 million. So it increased their cash by $21 million. Now, $282 million of cash in liquid investments. Liquid investments is important there. And this company has a market cap of 561. So take away the cash. So this company has an enterprise value of $280 million, which does seem fairly low. But how has the market reacted? Up 9%, which is understandable. But just like Mineral Resources, and you understand why I'm confused by Grange Resources. Have a look at Fortescue. So all the money in iron ore has been going to Fortescue. Look at that massive rally in Fortescue's share price. I understand they are slightly different companies, but wait there. In fact, we have seen a really good rally in Fortescue over the past week or so. What has iron ore been doing? I haven't been following iron ore at all. So we should be seeing a really good rally in iron ore prices where it is. Not much. Why is Fortescue rallying? It's ridiculous. Too much love in Fortescue, in my opinion. That's just my opinion. Where was I? Here we go. So you just see the difference in the chart between Fortescue and Grange Resources. No love in Grange Resources, but this company should benefit from increasing iron ore prices. We haven't seen a likewise increase in share prices, but even though the share price has increased 9%, this is not a breakout again. Just look at this chart. Share price is not an uptrend. Share price is not higher than the previous two highs, which was not that long ago. Not a lot of volume coming in the day. So I wouldn't be surprised to see the share price not go much higher from here just because of this particular chart. So, yeah, and then look at Fenix. What Fenix do? Fenix is a little bit better than Grange, but not as good as Fortescue. So a lot of these companies are going to be highly profitable in the first half. And Mount Gibson, this company did release their quarter results, and this company is going to be highly profitable. The only problem with Mount Gibson is their mine life is not that long. Anyway, I've gone off topic now. Now onto a couple of negative reports. Sayona Mining, this is a lithium company. Not sure I don't think they're lithium producers just yet, but we have seen quite a few lithium companies put out negative announcements. Core Lithium, Liontown Resources, all because of the decrease in lithium prices. And Sayona Mining have put out an announcement, operational review to optimize NAL cost structure. So this one just has been released because of a drop in lithium prices. So Sayona undertaking operational review of North American lithium operation, focusing on optimizing cost structure to manage cash flow and enhance financial sustainability. Personal changes enacted at Sayona's Quebec subsidiary in response to market conditions or lithium prices have fallen a lot. Operational review outcomes expected by end of first quarter of calendar year 2024. So that's going to be really interesting what they come out with. So Core Lithium suspended operations at their mine. So I don't think, it says they are a producer. So there is a possibility, I don't know this company too well, so there is a possibility, just like I said with Core Lithium, there is a possibility that operations will be suspended. Now, Core Lithium, cost to get lithium out of the ground was quite high compared to some of the other lithium producers. So don't understand yet or now what's going on with Sayona and what the cost to get lithium out of the ground is for this company. They also mentioned they fired 14 staff, which is understandable. Okay, so you would expect lithium prices falling. Sayona's still has a pretty high valuation, 500 million or something like that. And you would expect the share or the chart for Sayona Mining to be quite negative, and it is. This is a negative looking chart. Share price in a well-defined downtrend, and the share price on this day dropped 9.1%. Now, in saying that, you look at the trade history, volatile. Share price During the week, down 6.7%, down 4.8%, up 10%, down 9.1%. In fact, on the Tuesday, share price closed at 40 cents. On the Wednesday, share price closed at 44 cents. And on Thursday, share price closed at 40 cents. So a lot of volatility in this company. A lot of shares traded too. Must have a lot of shares on issue. And the company still has a market cap of 500 million, 411.7 million. And yeah, it's really negative chart. Let's have a look at the weekly. So share price of this company is getting down to the levels we saw back in April 2021 when the share price started to run as lithium prices started to go on a bull run. Share price high for this company was around 38, 39 cents. So we are looking at a decrease of about 90% for Sayona. I'm just going to have a quick look, because this company is a production. I'm just going to have a look at if they did release a cash flow statement. Yes, they did. In October, how much cash they produced in operations? So let's have a look. So Resmed customers, 75 million, operating cash flow positive, 33.4 million, but they did spend $30.5 million on property, plant, and equipment, $18.8 million in exploration and evaluation. So this company was operating cash flow positive in the September quarter, but free cash flow, well, depends what you do with exploration and evaluation. So you could argue slightly free cash flow positive, because the definition of free cash flow is operating cash flow minus capital expenditure. Exploration and evaluation, should that belong in operating activities section? There is an argument for that. So they did burn through cash on hand. Well, a lot of cash on hand, $211 million. Also did an equity raising. So plenty of cash on hand. So if they do release another cash flow statement for this particular quarter, I'm going to be interested to see how much the company's operations have been affected. Wouldn't be surprised to see this company now burning through cash significantly. And finally, we have Calidus Resources. They released their quarterly cash flow report on the 25th. Let's open it up. I don't think I'll do a standalone video on this company. I did have a look at this, a very quick look. We have to go to page 26. There it is. Okay, so I remember this one now. Cash receipts for this company have been dropping the last few quarters, which is a concern in my opinion, without even knowing this company at all. And you notice receipts and customers 29 million, production 40.5 million. So you just look at the production. It's considerably more than receipts and customers. They also received 15.4 million. What was that 15.4 million? They do mention Calidus licensed the use of the newly acquired Nalgene camp for $14 million upfront consideration, $1.4 million in GST payable to the A2 in the following quarter. So it looks like that 15.4 million was a one-off. So this company is not profitable how they're mining right now. In fact, they're burning through a lot of cash. So if you did or subtract that production cost from receipts to customers, company burned through $11 million just to get the minerals out of the ground, the commodity out of the ground. I'm not even sure what they mine. What does this company mine? I would say gold, but I could be completely wrong. Gold Resources, they're talking about gold, is an ASX listed gold company. Yes. So just based off what I see in this cash flow statement, I would not have been excited. Definitely was not excited because I didn't want to study or research this company anymore. But then I had a look at the share price and the market hated this announcement. Share price plummeted 12.8%. Don't know why I got that there. Plummeted 12.8%. Oh, yeah. So I had put this company onto my... No, I did not. I would have been closely following this company because it did look like the bottom of this company had been reached. You can see share price was trying to rally after a long-term downtrend of the share price. You can see the long-term moving average channel here, which is moving average between 100 and 200, was still going down, but the shorter-term moving average channel was starting to go up. That's a sign that the sentiment was starting to shift, particularly the shorter-term sentiment has shifted to positive, but the longer-term sentiment was still negative. We want to see both sentiments positive. We had not seen that. So that's why I would be maybe thinking about putting this company to my watch list. And I think this particular report, with the share price down 12.8%, has probably ended that potential turnaround in that longer term sentiment. And more than likely, the shorter term sentiment in this company has now shifted from positive to now negative. So chart looks awful, or more awful, for Calidus Resources. And it's understandable when you look at this report, it looks pretty bad. I'm still burning through plenty of cash. Anyway, I need a drink. So that's all I have for this particular video. And don't forget, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Enjoy your weekend, your long weekend. I'm actually working tonight. I did a swap. Should be a fairly good shift for me. And I'm not sure when I'm going to release this video. I'm going to either release this video, I'm going to release this video on the Saturday, the 27th of January. So if you are watching this video, I have finished my night shift. Hallelujah. More than likely, I'll do a run. I always do runs after my night shift. It looks like it's going to be really humid after my night shifts. So there's a possibility I'm going to die on my night shift. I'm joking when I say that. No, I'm actually physically prepared, physically used to running in really humid conditions. But if you do have any questions, any thoughts, leave those in the comment section of this video. But again, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified, right? Right? Yeah, you understand me, right? Okay. Anyway, have a good weekend. Bye.